Hello friends, in this lecture we will continue with our discussion on the topic of admission of a partner. So far we have discussed about what is admission of a partner, that is a new partner joins a partnership firm, right? Then we discussed about the calculation of the new profit sharing ratio. Because the new partner has joined the firm, he will obviously share the profits of the firm, because the very basic definition of partnership says that it is an agreement, it is an association between the persons to carry on business and to share the profits and losses of business. So if the new partner is joining as the partner, he will definitely share the profits of the firm, right? So for that we calculated the profit sharing ratio between the new partners, right? Then we calculated the sacrificing ratio, that is the ratio in which the old partners are sacrificing their share of profit in favor of the new partner. So we discussed about the new profit sharing ratio and second sacrificing ratio. Right? So now the third thing that we are going to discuss in this lecture is goodwill. Now the first question is, what is goodwill? What is goodwill? I will say in a layman's language, goodwill is reputation earned by business over a period of time. Right? So you all understand what is reputation, right? Reputation is a good standing. Goodwill is a good standing earned by the business in the market over a period of time. Now friends, can you think of the reasons what will be the benefits of having a good standing? Consider yourself. If you have a good standing, good reputation in the society, what will be the benefits of it? Just think for a moment. What will be the benefits of a good reputation to a business? Now let me tell you. If a business has a good reputation as compared to his competitors in the market, then that business will attract more customers, right? More and more customers will come to the business who is having a good reputation in the market, who is enjoying a good standing as compared to its competitors. What else will happen? Retain old customers. Consider yourself, if you have a good reputation in the society, what will happen? You will attract more friends. Who are the friends of the business? These customers are the friends of the business. Secondly, you will retain old friends. Similarly, the business will be able to retain the old customers for a longer period of time. What else? There is one very important point, that the business will be able to earn more profits than its competitors in the market. Right? If you are providing a good quality product to the customers, if you are having a good reputation of providing a good quality of a product at a reasonable price, then more and more customers will come to you, and the old customers will definitely be retained. If more and more customers are joining you, that means you will earn more profits than your competitors in the market. Clear? So this is basically goodwill. Now, for the detailed goodwill discussion, I'll suggest you should refer to lecture number 31 to 40, where we have discussed this goodwill topic in detail. Clear? Now, goodwill, if I talk of goodwill, goodwill is our reputation. Now, if you have a good reputation, if I say goodwill is a reputation, good standing in the market, whether it is an asset for me or a liability for me, just think. Goodwill is an asset for me, right? Now, can you feel goodwill? Can you touch goodwill? No. Can you touch your reputation? No. You can just feel it. So, goodwill is an intangible asset. What is an intangible asset? The asset which can only be felt and not touched. We cannot touch it, we can only feel it, right? Therefore, goodwill is an intangible asset for the firm, which enables a firm to earn the profit over and above the normal profit earned by similar business in the market, right? Now, how this goodwill is earned? By the efforts of the partners. If I talk of a partnership firm, this goodwill is earned by the efforts of the people who are running the business. Here, who are the people running the business? Partners, right? Because of this efforts only, they have earned a good name in the market, right? And they have generated a good goodwill, and they are earning more profits than their competitors in the market, right? Now see, if a new partner joins, right? If a new partner joins the firm, he will enjoy this goodwill, he will enjoy this reputation earned by old partners without any effort. If a new partner is joining the partnership firm, he will enjoy this goodwill earned by the old partners, right? So, for this, and the old partners are sacrificing here, the old partners are sacrificing some part of their profit in favor of new partner, right? So the new partner in any case is at benefit. He joins the firm, he will enjoy this goodwill that has been earned by the old partners. He joins the firm, the old partners sacrifice some part of their share of profit in favor of the new partner. So new partner is getting everything. He is at an advantageous position. Remember that pizza example. I'll quickly repeat this. This is a pizza. One, two, three, 4, 5 and 6. Two friends A and B go to eat pizza, right? They ordered one pizza having 6 slices, 3 slices for A and 3 slices for B. Suddenly a friend C joins them, right? Now what happens? They will have to share these slices of pizza with their friend C. 2 slices, he will get 1 from A and 1 from B. Here minus 1, minus 1. C get 2 slices of pizza. Now at that time I told you what is slices of pizza? Profits. And C is having 2 slices, he pays for this, he pays for these 2 slices of pizza. He says, out of your pizza, I have taken 2 slices of pizza, I will pay you. Right? So C pays for this pizza. What is pizza? Pizza is profits. Friends, refer to lecture number 51 for this detailed example. You will be able to understand it very clearly. Okay. So the 2 slices of pizza, that is profits. C, that is the new friend, new partner, is paying for this 2 slices of pizza. Here also I have told you that the old partners are sacrificing some part of their profit in favor of new partner. Here also the old friends A and B, they are sacrificing 1 slice each in favor of the new friend C. So he is paying for these 2 slices of pizza. That means new partner should compensate. Friends, keep writing these points because these will really help you when you will revise the topics. Okay. New partner should compensate the old partners for sacrifice of profits. Right? Here the new friend C is compensating the old partners A and B, old friends A and B, for their sacrifice of pizza slice. Right? And this payment is called goodwill. Right? So what is goodwill? When we have admission of a partner, the new partner will compensate the old partners for the sacrifice of the share of profits, and this compensation is known as goodwill. Why? Because this new partner, when will join the firm, will enjoy the goodwill, will get the share in the profits of the firm. So he must compensate the old partners for this sacrifice, must compensate the old partners for enjoying the goodwill that has been earned by the old partners. Right? One more important point here. As per Accounting Standard 26, goodwill on admission of a partner is not to be recorded in the books. We will not raise goodwill in the balance sheet. Okay, it should be adjusted through partners' capital accounts. Okay, the Accounting Standard 26 on intangible asset, I told you goodwill is an intangible asset. So as per AS 26, any intangible asset including goodwill is not to be recorded in the books. In case of an admission of a partner, it should be adjusted through partner's capital accounts. Now the question is, then when it is to be raised in the books? Goodwill is to be raised in the books only when it is purchased, that is, when something is paid for buying goodwill. See, here the new partner is not buying goodwill. He is compensating the old partners for their sacrifice in the share of profit. Right? The goodwill will be raised in the books, will be shown in the balance sheet only when it is purchased, when the money or money's worth is paid for buying the goodwill. Right? In case of admission of a partner or in case of the change in profit sharing ratio, right, there is no purchase of a goodwill. Therefore, we will adjust it through the partner's capital accounts. This you must remember for, because this can be asked in a small theory question. As per Accounting Standard 26, goodwill on admission of a partner is not to be recorded in the books. It should be adjusted through partner's capital account. Goodwill is to be raised in the books only when it is purchased, that is, when something is paid for buying goodwill. Okay, friends. So now let's see what we will be studying in the next lecture. In the next lecture, we will see the various cases how a new partner can bring goodwill and their accounting treatment. Okay. So in this lecture we have studied what is goodwill basically and what is the relevance of goodwill in admission of a partner. Right? The new partner should compensate the old partners for the sacrifice in the share of profits and also for enjoying the goodwill, a good reputation of the business that has been earned by the efforts of the old partners. Right? So in the next lecture we will study the various cases how a new partner will bring his share of goodwill and their accounting treatment. He will pay the amount of a goodwill to the old partners, his share of goodwill to the old partners, and how the old partners will treat his share of goodwill. Right? So this we will discuss in the next lecture. Thank you, friends.